Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Looking at the Australian dollar, you can see that since the bulls have noticed the presence of bullish divergence, which was highlighted from the RSI and also from the MACD, the fact is the last three bullish days have held respectively above 67 cents. Although there is a little bit of hesitation coming into today's price action as the market looks towards the resistance or the supply zone of 67, 65, 75, where I believe the market will take a reaction to a defensive case there and see a move back to the downside and look towards the key level of 66.60. A break beneath there would give further scope to the downside of 64 cents. Well, after completely disregarding the hammer that was posted yesterday, the price action overnight for the euro progresses further to the downside and looks towards the region of 108.2070. The dollar index, which measures the greenback strength against a basket of 6 major currencies, posted a fresh 2-year high overnight against the euro of 98.90, or in the euro case posted a low of 108.64. It is assessed, though, as we're getting rather low on the RSI to the extreme case of oversold, and the fact is that the ADX is somewhat overheating. I'm continuing to lower my stop loss just in case of the event that we do get a rejection around that 108.2070 area where we currently are sitting. If so, then we could look back towards 109.35 to 109.95. The dollar yen took a brief look at 110 but backed away sharply this morning, and from that it's still keeping my view that the fact we're looking towards the area of 109.50 and down to the region of 108.55.70. As you can see, the supply zone around 110.30.60 should continue to cap and therefore give us opportunity to add or get a short position from there, as supply should increase and see the move down, especially when you look at the technical implications. The RSI is looking back towards the midway point, which is seen around here, just as where I've highlighted it. The bulls are finding a little bit of pressure at the moment after the market briefly took the challenge to the top side around 129.75. Looking above there, quickly took a sharp turn, and from that indicates that the market may be now looking back to the downside towards the region of 129.10 and with the objective still towards 127.25.70, which is seen as the October 2019 lows. With the pound slightly strengthening, we're back to the bottom side of the range for the euro sterling cross around the level of 83.75. I do anticipate, like last time, a rejection from here and look back towards 84.35 and up towards 84.80.85. So my bull case in terms of how I'm looking this is still holding. The gold outlook, well, the market is still somewhat bullish as it took a brief pause overnight as it fluctuated in and out of losses and gains. However, from the close and also from the rebound from the low of 1,561, with the base being at 58.62, does give further evidence that the market should take the challenge towards 72.74 and then up towards the level of 85. Beyond there, I see no resistance until 1,600, figure 15, which is the 7-year high. Wrapping up with oil, well, we are slowly getting to a climb in the market after the recent confirmation from these candles here, and also the MACD strengthening up also, and the RSI breaking over the midway point. If this is a continuation of a recovery, that is, then I'm looking towards 51.60 up to 52.45, and then the objective holding at 83.80. On the flip side though, if we see a break of $49, this negates my bullish view and I sit neutral for the short term. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to this new day.